Welcome to our in-depth analysis of Star Bulk Carriers Corp, ticker SBLK, a leading global dry bulk shipping company. Today I'll explore its financial performance, competitive landscape, dividend trends, and whether its stock could ever hit the ambitious $1,000 mark. Let's dive in. Star Bulk Carriers, headquartered in Athens, Greece, operates a massive fleet of 151 dry bulk vessels with a capacity of 14.6 million deadweight tons. From Newcastlemax to Supramax, these ships transport essential commodities like iron ore, coal, and grains worldwide. The company's focus on fleet modernization and energy efficiency positions it as a key player in the dry bulk sector. However, the shipping industry is volatile, driven by global trade and freight rates, which poses both opportunities and risks. Let's break down SBLK's financials. In Q1 2025, Star Bulk reported a net profit of just $0.5 million, a sharp decline from $81.3 million in Q3 2024. This translates to a net profit margin of about 0.4%, heavily impacted by rising fuel costs and regulatory pressures. Over the past year, profit margins have been inconsistent, ranging from 3.4% to 6.5% in 2024, reflecting the industry's volatility. On the debt front, SBLK carries a high debt load due to fleet expansion and modernization. While the company generates enough cash flow to service its debt, low profitability in 2025 raises concerns. Its dividend policy is shareholder-friendly, with a minimum quarterly dividend of 5 cents per share, but payments are tied to cash flow, making them unpredictable. The payout ratio stands at 81.76%, which is sustainable but high. How does SBLK stack up against competitors like ZIM Integrated Safe Bulkers and Navios Maritime? While SBLK's fleet size gives it an edge, its profit margins lag behind ZIM's container-focused business. Safe Bulkers and Navios offer similar margins, but slightly higher dividend yields around 2 to 3%. Compared to global indices, SBLK underperformed the S&P 500's 10.6% gain last year, with its stock dropping 30% from $24.84 to $17.38. However, its 5-year total return of over 400% outpaces many indices driven by dividends. Looking ahead, SBLK is investing heavily in fleet modernization and energy-efficient technologies to comply with IMO 2030 and 2050 emission targets. These moves could boost margins but come with high costs. By 2040 to 2050, adoption of low-carbon fuels like LNG or ammonia could strengthen its position, but geopolitical risks, trade wars, or a global recession could hurt demand. Social and regulatory pressures for sustainability will also shape its future, with compliance offering a competitive edge but increasing operational costs. So, can SBLK reach $1,000 per share? At its current price of $17.25, this would require a 58-fold increase, which seems unrealistic in the near term due to industry volatility and financial constraints. However, SBLK's strong fleet, dividend policy and long-term investments make it a compelling choice for income-focused investors. For growth seekers, the high debt and market risks suggest caution. Compare SBLK to your investment goals and stay informed about global trade trends. Thanks for watching, and don't forget to like and subscribe for more financial insights.